right, guys. This is Crypto Kenny. Welcome again to Crypto Weekly, where we talk about everything in the crypto space and sometimes even things in traditional markets and how they relate to crypto, NFTs, DeFi, all the stuff that everyone wants to listen to. So last week we had a segment on some of for newcomers into the space, what to look out for, what's the first items you should take care of when you're coming into the space. What are some safety protocols? What are some mistakes that some of the veterans have made that we want to let you know about, so that you don't have to make? So that was a great video going on in that last week there. So today, we have a very special treat. We're gonna kind of jump into a more advanced topic. And so today with me, I have Mr. Rick Pulcrano. He is a entrepreneur, a business builder, a lobbyist. He spent many years in the traditional investment space. He spent the last several years in the crypto space, so he has some knowledge across that kind of crosses borders when it comes to investing. So he's going to be on with us today. We'll be talking about a lot of topics that we've gotten questions from the Alpha Mutants group, and then just throwing some other ones in there for anyone else out there that's listening. But so, Mr. Rick, thank you so much for taking the time to come on and talk to me and talk to the Alpha Mutants and just give us some of your experience and foresight on some of these questions. So first off, I would just like to maybe have you give a little description of just your time in the traditional markets and how you got started there. Maybe a little bit about your entrepreneurship, business building, and then how you got into crypto, so we can kind of have an idea of your career in the investing space.
All right, Kenny. I come from the traditional schooling. I undergrad and graduate school at GW in Georgetown in DC. After graduate school, I started a medical business in the state of West Virginia. First of its kind. It was a mobile diagnostic company. And we went from there to basically buying up mom and pops around the country, formed a national company. So I spent a lot of time on the acquisition side of investing. And throughout the years, I was a traditional investor in stocks, and I did commodities and a lot of other things. And it was 2012 that I was doing some investing overseas. And the biggest problem at that time was the transferring of money. And I had an investor out of Australia tell me, why don't I pay you in Bitcoin? And it was new to me. I said, well, okay, how's it work? And he says, I do this, and within a minute or two, you'll have it on your end. I was in total disbelief because I was used to the traditional wiring of funds through a bank and the fees and everything else. So I was totally convinced when I had, I think it was like $10,000 at the time, sent to me by Bitcoin. I was I was sold. It blew me away how easy it was. So I actually got involved in buying Bitcoin and Ethereum, which I still hold of some of my original investments back in 2012. And I've been a crypto believer since that time. I have gotten into a lot of different coins. Recently, we've gotten into NFTs and other areas, but I really feel the digital way of money is where it's all going. So I'm excited to be involved working with Kenny and talking to other people in the field and explaining where I come from, which was the traditional market, and now getting into the digital market.
So that brings up a really good point. Like, I think that's a lot of people's first experience with like crypto is I mean, it blows people away, the speed and the accuracy of being able to, to move such large amounts of money so quickly around the world. I think a lot of people in the space, that's what brought them to it. So I have a question. So what do you feel like the biggest differences are when you're talking about investing versus the traditional markets, the stock market, and crypto? Like, what do you feel like the biggest differences are when you're coming at those as an investor? As like two different entities, are they pretty much the same, or do you see like certain differences when you're looking to invest in those two different areas?
Well, you're investing, any way you look at it, you're investing your money. And the nice thing about crypto is it is 24/7. You can go into the markets any time of the day or night. Um, I look at it as stocks, crypto. I look at all investments as I'm buying at point A and I'm trying to get to point B, which hopefully is higher than point A. So I look at them as the same. As in all investors, we're trying to make money on our current money. But the real attraction to me is 24/7, that I don't have to wait the weekend, like when the traditional markets closes on Friday and opens back up on
Right.
Monday.
Yeah.
I like the fact that I can go in any time of the day and invest.
Yeah, that's funny because I have a traditional portfolio in the stock market that I allocate. I'll let some funds build up weekly that are in it, and then every now and then I'll allocate it. Right. And I was thinking the other day, I was like, oh, there was a particular stock I wanted to purchase a little bit more of, and I was like, oh, I'm going to go do that. And I got on my application to get that done, and it was Saturday, or it was Friday after the close, and I was like, oh man, I got to wait till Monday to do this, and I'm so
Yeah.
spoiled with crypto, when you can do those transactions whenever you want. So yeah, I understand that completely. All right, so we have a list of questions that I've kind of gathered from some of the people in the space here that would just like some opinions of yours on it. So currently we're seeing, and we have been seeing for the last 4, 5, 6 months, this downtrend in I mean, almost every market. We're seeing it in crypto, we're seeing it in the stock market as a whole, specifically in tech stocks and things like that. So, um, one question that I have here, one of the first ones we'll run is what should people be doing with their money currently? Well, in these market conditions where we've seen, major stocks drop 90%, where we've seen, low cap and mid level cryptos drop 99%. Like, what should people be doing currently with their money at this time?
Well, number one is you have to always think preservation of capital. You have to not worry about how much you're going to make, but how much you could potentially lose. So, I mean, my current portfolio is I'm in cash or cash equivalents. I am in some high dividend RITs where I'm trying to get a certain percentage above the 8% inflation. I'm totally out of the S&Ps and traditional stock market. The only stock that I hold and I've held since the 80s is my Berkshire Hathaways, which is kind of like a big mutual fund. And I'll take the ups and downs in that. But everything else, I'm pretty much on guard. I think we need to be on guard at least for the next 2 years. So it ultimately gets down to, preserving your capital.
Excellent. And I think that's a thing that a lot of times a lot of people don't want to hear, specifically in the crypto space, because people are spoiled. A lot of people in this crypto space have been spoiled because we've been used to these last 2 years of just this massive bull market. People are used to getting 10, 20, 30% a week or so in their portfolios and all this kind of stuff. And the idea of having to be patient, wait, is kind of unappealing to some people, but it's stuff that needs to be taught. We need to retrain a lot of the newcomers in the space because they have to understand it's not always a an all up roller coaster ride. There's downs too. So we hit these periods, and you have to change your mindset. So I agree with you completely on that. So the next item would be, do you think this current bear market will be comparable in any way to the 2017-18 market, when the market crashed in 2018 in crypto? Do you think it's comparable to in the traditional stock market? Do you think it's comparable to the 2008 crash, or do you think it's going to be less severe, more severe? Like what's your opinion as far as like what potentially could happen with this current bear market, this current down market?
I think that the recession that we're getting ready to go into will make 2008, 2017 look very mild. I think what we're getting ready to go into, you got to think we've got a war going on in Ukraine. That's a powder keg. You've got Putin, who they say has got cancer, who's potentially dying. You never know what this guy can do. We could have a nuclear war real easy. Then you have China looking at Taiwan, which is another major disaster that could happen. But I think the biggest difference between this one and 2008, 2017 is the ineffective White House administration we have. It's just totally incompetent. You look at the southern border, you look at inflation, you look at the fossil fuel industry, where we're at. We're basically being hit from all directions. And the everyday person can feel it with gas prices, with food prices, you name it. My son just got a call from his landlord having to raise the price by $50 a month. And it's just because all his rates went up. So everybody is feeling this. So I really feel that we're in for a really tough environment over the next 2 years. Now, magically, it will clear up in 2014 because of the presidential elections. So, but we've got at least a year or two that it's going to be very tough out there.
Gotcha. And I mean, yeah, and what you're stating there is like the what I'm gathering from it is it's not comparable to like 2008, because we had the housing crash in 2008, but that was substantially one thing. So what you're saying is there's a lot of macroeconomic issues going on currently, and all of those together have basically ignited kind of a powder keg for a bad situation in the markets. Because I mean, it's do you remember any time in your lifetime where you felt as kind of fearful of what's going on in the markets currently? I mean, is this something that's that holds any more weight than other points in your life, or can you remember other points in your lifetime where it's been something that you felt was as bad as what we currently got going
on? I look at it as, do you feel insecure? Yes. But do I see this as a great opportunity? Yes. I've had 2 times in my life of an opportunity, 2008, 2017. If you prepare yourself right and keep your expenses down and prepare for a recession, it's the best opportunity you'll ever have in investing. You come out of a 2008, I came out, you basically could throw a dart at the Wall Street Journal stock listings and make 100 times on your money. It was, you could be a dumb investor and make a ton of money if you had cash. So yes, I look at it as everybody should button down the hatches, because there's going to be a lot of bankruptcies. a lot of layoffs. Um, but for the people that have money set aside, um, you'll make more money in the year or two coming out of the recession than you ever will during your traditional years.
It's fantastic. So when you were saying earlier, that you're mostly in cash, that's what you're looking forward to, right? Stacking the cash, watching your expenses, keeping that up in order to take advantage of the down market moving forward. So it's basically the same strategy as what you took in 2008 during the housing market crash, correct?
Yeah, I look at, um, do you want to take a cruise or a vacation and spend $10,000, or do you want to take that 10,000, put it away, and maybe make 100 times on it and take a better vacation down the road? That's how I look at things.
Yeah.
I would prefer to make 100 times on my money if I could
Right.
versus a trip. You can always do a trip.
Yep. Fantastic advice. I think that's great advice, specifically now because there are some people still in the space that have made a good bit of money over the last couple of years, and that's what they're doing now. They're taking big vacations, buying cars, and in your opinion, it's not the time to be doing that.
No, I see people every day that are still spending money like the economy is roaring out there. And those are the people that will go bankrupt someday, or they'll be in trouble, or they won't have the money to invest when the markets are right to invest in. So, I tell everybody, just go into your regular supermarkets, gas stations, and talk to people. Hear what they have to say. I mean, recently I was at a gas station and the conversation came up about the cost of gas and how it's taking money out of their pockets for other things. That's who you want to talk to. You want to hear what your everyday other Americans are saying out there, and you can feel the pain just talking to people.
Yeah, for sure. I mean, I can definitely back that up. I mean, I can't tell you. There's not a day that goes by that I don't talk to someone in a gas station or a store or just out and about gas prices. I mean, it is really hurting people. I can't tell you how many times I've heard somebody say, a year ago, I could fill up my tank for $25 and now it costs me 60. Just things
Yeah,
like that. And I actually saw some posts on some social media sites the other day of people saying that I can't even afford to go to work anymore because you got these people that sometimes drive an hour and a half, 2 hours to work.
right.
And I mean, it's becoming eating into a large percentage of their daily wage just getting to work and back because of these things. So like you, those are the things that I start to consider, even when we see bounces in the market. Like this weekend, we've had a pretty solid bounce in Bitcoin, and we've seen some upside and stuff. And you still have these people in the space right now that are saying, "Oh, we're getting ready to run back into another uptrend or whatever." And there's still people saying those things. They're still saying that we've got another. We're gonna. There's some people still thinking we're gonna hit all time highs again this year. And I hear what they're saying, and there are points to the different arguments, but like in my mind, when you get to the ground floor, the ground level, and people are paying twice what they did a year ago for all of these everyday items, I just see people spending less and less and investing less and less when they can't afford to eat and they can't afford to pay gas. And so, my take on this is I'm very, very, very cautious about the markets right now. I haven't even started to DCA into much yet because I just feel like there's still a good bit of downside left. Personally, that's my opinion. But
Yeah, the yeah, any of these upturns are just uh, basically fake upturns. I mean, it's just people getting trapped. We've got a ways to go down. I mean, right now we're spending $120 a barrel for gas.
mhm.
We're going to go to $175 to $200 by August. So that's going to put gas prices up to $6 to $8 a gallon. Every penny we go up in gas, everything is made from petroleum. So all your food, all your hair products, everything goes up. So, I tell people right now, everybody's used to just jumping in their car, going to the mall and picking up one item. I was like, you know, let it, consolidate for a couple days, then go. I said, you have to think like that because
Yeah.
every time you go, you're using gas. And, it sounds crazy that you have to become a tightwad, but tightwads are the ones that make it through a recession like this. And, it sounds, crazy, but it isn't crazy. You have to really button down the hatches during this period. I mean, we could be in for some serious times right now, and you have to be careful out there.
All right. So the it sounds to me like, obviously the last couple of things we talked about. I mean, it's very imperative now that people are mindful as to, what they're spending their money on, how much cash they have in reserve currently, and then just evaluating your expenses to make sure that you really need what you're spending your capital on right now, because it could potentially be a lot worse or get a lot worse. So my next question to you is, and obviously this is a theoretical question because nobody knows, no one's an oracle, because if we were, we would be probably even talking to anybody else because we'd just be so rich we would have to deal with it. But in your opinion, where do you see if and this is on the caveat. So say that the we don't have um any additional black swan events going on. Say that we don't end up having any additional problems with China and Taiwan. Say that we don't have any no higher escalation on like the global or the war currently in the Ukraine versus Russia and all this. Say that those things stay stagnant and nothing new on them, but that we continue it with the current macroeconomics that we've got currently in the U.S. When do you see the bottom of this thing coming in? Like what time frame do you see where we actually hit bottom? Worst, peak fear. When does that happen in your mind? What's your best guess on
If we don't have a black swan like China taking over Taiwan, and we're basically the scenario you suggested, I think that we're coming out of the recession in the third quarter of 23, third, fourth quarter. We know coming into 2014, you got a year of time for the presidential elections.
that? Or 2024?
Yeah, 2014, or I'm sorry, 2024, sorry.
Mhm.
Yeah, so I think somewhere in the third to fourth quarter 2023, we'll start coming out because inflation isn't, we're not done with inflation. We're going to be rising in inflation throughout this year. And a lot of it will depend on how aggressive the Fed is with tamping down inflation. So, we've got a ways to go on inflation. Then it's got to start trickling down. So I think that 2023, somewhere in that year, it'll definitely be past the half year point, and then we'll start coming out of it. I that's my best guesstimate at this point.
And then if you threw a black swan event in there, if we do see something like a Chinese invasion of Taiwan, or maybe even like extra turmoil in Russia, maybe Putin passes away, we've got a power struggle there, with that type of thing. If an event like that would happen, do you think that changes when we come out of these markets? If something to that global effect would happen during this time frame.
Yeah, I think that we could go into the first, second, or third quarter of 2024. I don't think it will affect the last quarter of 24 because the elections are in November. And as we know, the politicians like to clean things up right before an election. Now, obviously, a war or something changes that. And I can't imagine war China with Taiwan, I think that would be fairly quick.
Yeah.
They're just too, it just depends on where the US is. If the US gets involved and then we end up in a war with China, who knows? If it's a nuclear war, who knows? It could be quick. But somewhere in 23, 24, based on those two different scenarios, you want to have as much cash as you can have to deploy. And I tell everybody, start now and write down what you want to buy. Start justifying why you want to buy these investments and what price you want to pay for them. So when the time comes, you're ready to go. You got a blueprint of what you want to do, and you deploy your funds, and you know how long you want to leave it in there. I can tell you in 2008, we made a lot of money, but I wish that I would have kept a lot of these funds 2 to 5 years after the recession, because I could have made a lot more money. I just took advantage of making. I mean, when you make 100 times your money, it's hard to not take the money.
Yeah, for sure.
But I could have made, one of them I could have made almost 600% on my money. But you got to be happy with whatever you take. If you get 100 times your money, if you're not happy, there's something majorly wrong.
Right.
So that's kind of where I'm at with coming into the recession and coming out of the recession.
All right, for sure. Yeah, and we also talk a lot about, in of course, in the Alpha Mutants Discord and just in, in the space altogether, we really hammer it into people about picking levels to take profits at, because we all always regret that one that we took a 2 or 3x on and then it ran up another 10x. You always regret those things, but you have to have some kind of plan set down, because if you don't, you just ride everything into the ground eventually. You know what I mean? There always has to be a plan, and that's why I like what you said about right now during this period when we're seeing all these downtrends, to at this point sit down and say, what do I want to have part of my portfolio in the coming, when we get out of this recession? Like, what do I want to buy into, and what price would I like to get into those at? And I think that is super powerful, because I think it vocalizes and visualizes, where I want to get to, or where you personally want to get to with your portfolio, with your investments, whatever it is. And I think that's excellent. I think everybody.
Yeah, I tell everybody, if you put $50,000 into the market and you're coming out of the recession, take your 50,000 out so you're playing on house money, or take your 50,000 out and 10% above it. You decide what you want, but take it out and ride the house. That way you're at no risk. If the market turns, you've taken at least 10% out. And that way you can let it ride. You don't have to be stressed about it. You can sleep at night knowing, hey, I've taken my original assets and 10% or whatever number you use, and you can let it ride. I mean, you can really let it ride because you have no skin in the game at that point. Just house money.
Fantastic. Yep, we love playing with house money. I tell people that all the time when we're doing consultations of trying to get people to get a plan set up for what they do, and I'm such a stickler for that. It takes away so much stress when you discipline yourself enough to play with house money, to take out your initial investment when you need to, and to just ride the house, because then you protect yourself, you protect your own sanity sometimes, and it's a very good advice for anyone. So the next question I've got coming on here is what is your personal strategy moving forward over the next, the rest of 2020, or 2022, 2023, 2024 and beyond? What is it? What is your strategy, or your investment strategy moving forward from this point?
Well, my number one is preservation of capital. Number two is I am trying to raise capital. So I'm in investments that are paying reasonable dividend, just that are totally safe. And, I'm getting some money out of it. One of my number one ways of getting the money, I've been a long-term investor in GSBD, which is a Goldman Sachs business development fund. Pays about 11%, very safe. And so it's not a matter of rushing to see how much capital I can gain. It's gaining capital and also protecting your funds. So, if you come out of the recession and you have capital, that's number one right there. You've got capital. Most people don't have capital. And number two, don't margin any money at this point. You got to stay out of margin. Don't try to margin money to get extra capital or get extra dividends. Too much of a risk. There's no reason to be paying interest on margin in this kind of risky market. So take whatever capital you have, put it in a secure fund that you can get some capital dividends out of it, and just do that until you see the signs that we're coming out of the recession. And there's all kinds of different signs you look for out there. And one of the number ones is just talking to your everyday friends and neighbors. You'll know when you're coming out of the recession. People are starting to do other things, go on vacation, buy other things. You'll see it. I mean, your everyday life. And then you'll start seeing, the headlines in the papers. And, there's a lot of ways to know when you're coming out of the recession.
So one of the big things here that I'm looking at and that we've been discussing inside of the Alpha Mutants Discord, and also I wanted to just say anyone currently watching and taking down some notes on this or just watching us just for the fun of it, I will have linked below on the video the social media accounts, Discord accounts for Alpha Mutants. If you want to come in, we talk about things like this all the time. We've got a lot of market tools that help help our members to select the right trades, the right places to be in. We called a move to stable coins almost a month or two ago in this market. We've saved a lot of people a lot of capital because with the rest of this downturn. So if you're interested in that, those will be down below. But moving forward with you, Rick, what does your ideal portfolio look like once you get to a place where you see the recession coming out? Like, what percentages are you looking to put into the traditional stock markets, perhaps real estate, and then crypto? Like, what does your portfolio look like, and or how do you balance out what you're investing in your personal portfolio moving it out of this recession when that time comes?
30% is in REITs and stocks. Another 20% is in like a low load, like a Vanguard S&P 500 fund that you're just tracking the overall S&P. And then I have another 50% that I keep in the crypto markets, USDC. And then, I'm looking at a lot of the blue chip coins. Well, we are. That will be massacred during this down market to then buy in and make 50 to 100 times our money. So all the ones that I like now that survive, I'll be buying back aggressively once we start coming out of the market. Now, you can't time the market perfectly, but I'll dollar cost average in, and I pretty comfortable that will dollar cost average in the probably 10%, 10 to 15% of the low of each of the investments we're looking at. So, I'll dollar cost as we're coming out of the recession, I'll dollar cost average in and go from there. But I'm weighting more towards the crypto market ultimately, mainly because I think that's where everything is headed versus the traditional stock market and bonds and those kind of things.
Yeah, I think what impresses me is you. I mean, I talk to all kinds of traditional market guys, right? There's always these traditional market guys that are talking to other crypto guys, and they normally have this conflict most of the time. And it's like it seems like it's like you're pretty forward thinking for being someone that's been in the traditional market so much because a lot of times if you have someone well Warren Buffett and Charlie Munger are good examples, right? These guys absolutely hate the crypto space. I think they've been pretty good about just admitting, they don't have a lot of knowledge in the space, but you have a lot of your old school traditional guys that are like that. So what is it that I mean? Obviously, you've said that you think that this is where finance is going. It's going digital, and I think a lot of people that have been in the space a while, like that's what brought us into the space. We think that that not just Bitcoin, but even things like national stable coins for like countries and stuff is going to be something that happens in the very near future. And so everything seems to be going that way. But I mean, is there beyond that, beyond you just think that's the future? Is that what kind of just brought you into the crypto space? You're just kind of like looking almost like people were looking into the the internet age, right? Like a lot of there was a lot of people during the beginning of the internet that were just like, man, this thing is never going to be anything, or people that said that, well, it's a fad, it'll die out and everything. And there wasn't really a whole lot of investors back then that were investing into internet based stocks until years and years later. So is that what you're looking at? You're just trying to basically just kind of like be a front runner in that in what you think is going to be I guess the biggest technology wave of like the next couple decades.
Yeah, I'm a very long-term investor. I'll give you an example. Berkshire Hathaway's Bitcoin Ethereum. Berkshire Hathaway's got in at 19,000. It's currently 600,000. Bitcoin, Ethereum, both of them got in below $20. We know where they're at now. And look at the volatility of Bitcoin. Bitcoin could come down to 20,000 again. Would I sell any? No, I wouldn't sell any of it because I look long term. I look, where's Bitcoin going in 10 to 15 years? Where's Ethereum going in 10 or 15 years? And that's the way I looked at Berkshire. I when I originally bought Berkshire, Warren Buffett was a mentor of mine. I always looked up to his style of investing and looking for companies that were moots. They call them moots, that basically could charge what they wanted because of the industry they were in. They were just that selective in what they did. I look at Bitcoin and Ethereum the same way. They're in a class of their own. And I look at them long term. There's a couple on my blue chip list right now. Cardano, several of them, AVAX, Solana.
Yeah.
I look at these long term. Where's Solana going to be long term? Where's Gala going to be long term? You can almost write where they're going to be in 10 or 15 years.
Yeah.
So
sure.
why not own it now and just put your blinders on and know there's going to be a lot of volatility and just hang in there. They will be the Facebooks and the Googles in 10 or 15 years. There's going to be 4 or 5 of them that will be the names. You can almost guarantee the Galas, Solanas, AVAX, they're going to be there.
Yeah.
And if you hold on to them and not worry about volatility, you're going to make a lot of money. And you don't have to be a smart investor to make a lot of money. If you look long-term and down the road. And don't look at volatility. Volatility, you'd be out of the market in no time in crypto.
Mhm.
So, I mean, I look at Bitcoin. Bitcoin has probably had since 2012, when I originally got in, how many huge volatility spreads has there been? I would have been out of the market 100 times probably. So,
Oh yeah, because I mean,
uh,
if you, I mean, because that's super early, like 2012, because Bitcoin really wasn't even talked about a whole lot until 2010. So you were very early. So you actually saw massive market corrections at like the 90, 98,
yeah,
99% back then, because that was the wild west. I mean, we're still pretty wild west these days, but I mean that was at the very volatile beginnings. So you're you're
well, and
you're
I held on because of just that one time that I had funds transferred to me.
Mhm.
Because up until that time, the biggest nightmare of trading overseas was sending money and receiving money.
Yep.
So when I saw in less than a minute that money being sent by Bitcoin, I didn't care what the market was down 90%.
Yeah.
Didn't phase me. I looked at the technology and said, once enough people see what I saw, they'll hang on to this thing and it will keep growing. And that's what it's done.
Yeah, I
So
actually, I actually call that a Ray Kroc moment, because I don't know if you know much about the history of McDonald's, but that was exactly why what happened to Ray Kroc when he stopped at the one McDonald's location, or when he was at that traveling salesman. And up until that time, he was so used to being on the road, where they would have to have these trays that connected to your cars. You had to have a fork and a spoon and all this kind of stuff. And it was just a big mess. And he walked up to the counter and said, "I'll take a burger and fries and a shake." And the guy just instantly turned around and gave it to him. And well, he's like, "That can't be my order. I just ordered." And he said, "No, it's ready." And he's like, "Well, where do I eat this?" He's like, "It's in the paper. You just eat it." And he's like, "Well, where do I go to eat it?" And he's like, "You just eat it anywhere you want." And he said that when he had heard that, he said it was like a light bulb moment in his head, that this was a new system of doing things that fixed so many problems with the old systems. And he said he just never looked back after that. So I tend to call moments like that of clarity, like you use something for the first time and you're just like, wow, this fixes a problem that is such a huge problem. And it basically just makes you a believer, just like that, because you see that moment of clarity. So that's pretty cool that's the story of of you doing that.
well,
And,
to be it's a small world. Back in the 80s, I actually went through the McDonald's franchise and was approved.
uh-huh.
I actually sometimes I kick myself because a good friend of mine went through at the same time.
Hmm.
Now he owns 9 McDonald's down in Charlotte area.
Hmm.
I didn't get in because the low wage employees. It's a nightmare in that business,
Yeah.
and that's what kept me out of it. But it's a blue chip franchise, and again, I was looking long term, and McDonald's is one of the few long term franchises that are just a major success.
Yeah. Yeah, that's cool. That's funny. I've known you forever, Rick, and you never told me that story. I learn new stuff all the
Yeah,
time.
I spent a week flipping burgers and working the drive through
Yeah.
at a place in Ironton, Ohio, and
Hmm.
I loved every minute of it. I love the McDonald's franchise. Everything makes sense with it. So,
Yeah.
uh, and I do regret sometimes that I didn't uh, go through with it, but you always look back at certain regrets, but there's been a lot of positives since then too. So,
Yeah, for sure. For
um,
sure. So now, a couple of the very specific things that we got probably another 15 minutes here before we'll have to wrap up. But so we the, I had a question of a couple of the guys in the group that just wanted to just kind of ask you, if you were only in these particular markets, what would your plan be moving forward, during the recessionary period, then coming out of the recessionary period. So I'm just going to give you some of these different markets. So in real estate. So I know you've had some experience in real estate over the years. If you were looking to get into real estate during this recession and the out and going out of the recession, what would be your plan for any real estate investments moving forward? I mean, would it be physical real estate? Would you just suggest people be getting into REITs current? I mean, to get into some exposure, what would be your suggestion?
Well, I mean, it really depends on the person. If you're a person that's a real handyman and can buy, torn down places and fix them up and flip them, or you can do rentals and you're good at, repairs, great, go for it. If you can go it, if you're somebody like me that tears things up, I can sure break things down. I just can't put them back up. I would do the Ritz in a second. That's what I'm in now is Ritz. Yeah, I mean, you can't go wrong in real estate. I mean, as they say, they only build so much, owning so much land. It's all true. So me personally, it's Ritz for me. That's where I am on the real estate side.
So do you have any particular ones that you suggest that you like better than others that you look at in the market? Because I know I'm in a couple. I'm in I like looking at real estate, or what is it? It's I think it's just like triple O. Realty Investment Trust is one that I'm in. Um, I'm trying to think of a
Yeah,
couple.
yeah.
Is there any?
I'm very high on GSBD, which is the Goldman Sachs Business Development. I've
Mhm.
been in that for 7 years. I don't have the names, but there's some Ritz in the nursing home side that are good because they're funded by the government. So there's pretty safe there because like Social Security, they gotta pay. I mean,
Yeah.
it's like clockwork. So, but you got to be careful also in this period. There's going to be a lot of bankruptcies, etc., during a recession. So you want to make sure whatever you're getting into, is invulnerable to, the recession.
Right.
So like the Goldman Sachs, they're pretty much triple protected based on the clients they take. I mean, they've got to have X amount of dollars in reserve and etc. So, just be conservative. Don't look for the one that's going to give you the highest return. Look for the one that's going to give you the safest return.
Mhm.
That's what you want.
Excellent advice. Yeah, I know that some people will just go through, dividend stock portfolios or rich stock portfolios. They'll just look at these, highest payouts. And, oh, this is giving me 16%, 20%. I've done some speculative investing in those type of things. I was with a REITs one time that was doing I was a ridiculous 17, 18%. And I wrote it for about a year and a half and it did fantastic. And then just crashed and burned. You
Yeah.
know what I mean? During a down period. So you do have to be very selective, very careful about when you're, it's not a time to be speculative, right? Right during
Not
this,
at all.
no, not a time to be jumping into things that you don't understand or that haven't had a good track record. Definitely not the time for that. So,
Well,
um,
and this is where a lot of scammers come out when people get desperate. You get a lot of scammers coming out offering returns. And I always say, if it's too good to be true, it's a scam. I mean, there's no
yeah,
ifs or buts about it. So put your blinders on. If somebody calls you and offers you some kind of return that you probably couldn't make in good markets,
mhm,
hang the phone up
yeah, for sure.
or delete the email address. So
For sure. So, and then we're talking. Well, we've already talked a little bit about what you're currently looking at into to DCA and into crypto. So you're really big on these. It sounds like the L1s, the ones that have been hit really hard, but really haven't had any change in what they are. So, like I heard you say Solana, which is down like 95% right now, from its all time high, and really has had no change in the technology or any kind of actual problems. Same with AVAX, which was AVAX was booming, and everyone was a few months ago was saying, "Oh, this is the new darling child of the L1s because of the scalability and stuff like that." And Gatla Games, you mentioned that's probably the biggest gaming studio inside the entire space. And all of these guys have seen 90, 95, 98 percent
Yeah,
falls.
and nothing's changed in their business.
Right.
That's the beauty. That's what you look for is, has the business changed any? Have they lost business? Are they gaining business? I mean, I was on looking at a Gala last night, their website. They're booming out there. I mean, they're growing like crazy. And then you look at their stock, their investment, and you think, wow, what's happened to these guys? Nothing's happened to them. It's the market.
Hmm.
So those are the ones that you buy in that when they're severely depressed, and when they come out of the recession, they will boom. I mean, there's no question about it.
Fantastic. So are you looking to potentially, are you set? Because I know that you picked up Bitcoin and Ethereum at like a major discount. I know everybody that hears that you bought in under $20 or so, they're gonna be so jealous because that's all of us wish we would have made that decision at that point in time. But are you looking to are you at the point where you're DCAing any more into your Bitcoin and Ethereum holdings, or is that something that you're just comfortable with, and now you're just focusing on like the layer ones and stuff like that, or
No,
what's your
hey, if Bitcoin gets down to 20,000 or somewhere in that range,
Mhm.
I will be buying more. I mean, I just think Bitcoin in the long run, they say, oh, to get to $1 million someday, and people laugh. I'm not laughing. I think when I originally bought some at $12 and $14, and I told people it would be $50,000 someday, they laughed at me. Well, they're not laughing now.
you should have taken some bets on that this year. You could have
Yeah,
made some money, but like yeah, definitely. So
and I always tell people that I had to sell Bitcoin. Oh, years ago, I had to sell some for tax reasons, and it hurts me every time I look at it because those were some that were probably bought under $100,
yeah,
and we know where they're at now.
yeah,
So absolutely, if I can pick up Ethereum for 1,500, 17, somewhere in that range, I'll buy more.
yeah.
But those are your blue chip long termers.
Mhm.
I'm more interested in these, Solana's, AVAX, the Cardanas. Those are the ones that are gonna rapidly. Those are the ones you're gonna make 100 times on your money down the road. There's no
Right.
question about it.
Fantastic.
And
Yeah,
you don't have to be some sophisticated, top notch trader to do this. You just have to look at the company and it's okay, say, well, where are they going to be in 5 or 10 years? Look at Gala. Gala's a perfect example. You can have your blinders on and know that they're gonna be successful in 5 or 10 years.
yeah, for sure. Because
And
even during the down market, they continue to add new projects. Like I saw them
yeah,
drop adding up, another more projects. They're not slowing down at all. Even with the downturn, not slowing down. Keep producing. So
yeah, you look at their Discord and there's always something going on. And that's
mhm,
what you have to look at. Are they adding during these down markets? They haven't missed a beat. I mean, they're just aggressively going. And, all the ones that we're talking about, same way, nothing's changed.
yep,
And, I'm hoping they go down another 20, 30%. I mean, I'm expecting them to because of the people will need cash out there and people will sell.
mhm.
All the people that are taking vacations and stuff now, I'll be buying from them. So I can't wait. Take your vacations. Go buy your boat. Go buy your Mercedes. You're doing me a favor. I get to buy cheap. So,
That's great.
I put a smile on my face when I see these people that are spending like crazy right now. So go for it.
Gotcha. Fantastic. This is it makes me laugh. Pretty great. So, All right, so we only got a couple more minutes here, so maybe I'll just ask you, closing thoughts to to our audience that's gonna to the several hundred people will probably watch this from the Discord, and then anyone that's searching the this type of content. What's your final thoughts for everybody that is fearful of the markets coming, what's happened so far and what could potentially happen, and they're worried about if they can even make money in the space anymore, and just those days. What's your final piece of your parting piece of advice to these people now?
I would tell everybody, it's not how much money you have. You could have $100 in the market, you could have $1 million in the market. It's picking the right investment, picking the right horse that's going to win down the road. And just the ones that we talked about on this call, you could pick any one of those and probably make 50 to 100 times your money coming out of a year out of the recession. No question about it. So, live life, watch what you spend, try to put money away. I always tell everybody, you're in your job, if you get a raise, don't start spending like you got that raise. Take that money and save it. It doesn't, put $5 or $10 extra away a week. It adds up. And I go back to what I said originally. Just imagine $10 extra that you made 100 times or 200 times your money on coming out of the recession. That $10 becomes a lot of money down the road. So you got to live your life. Every day's a gift. So you never know when your day is up, but you can live your life sensibly too, and live it conservatively. And I think if you do that, you'll come out of the recession and be so far ahead. And I also tell people, living with debt, it makes you hard. It's hard to sleep, and when you got debt out there, when you don't have any debt and you're growing investments out there, it makes sleeping a lot better. So I just would tell everybody, button down the hatches, save where you can. If it's $1, $10, whatever it is, and know that you can take that money and make a lot of money on it as we come out of the recession. And don't do like I did in 2008 with some of my investments, where I cashed out too quick. I wish I would have stayed in some of them. So I hope that is answered most of the questions for people.
Yeah, for sure, man. And thank you so much for coming on and just sharing not only just your knowledge in the space, but also just some of your stories and experience. And it really helps a lot of people to be able to hear what other people have went through in similar markets, and to just say that to hear someone else that's already been through it say you don't have to be afraid of this. It could be a good opportunity if you do the right things. So I think that's very valuable to a lot of people. So Rick, I thank you so much for coming on the call today. Definitely would like to have you back sometime. Maybe we'll get on like a 3 or 4 person panel sometime, and we'll discuss the markets, current markets, and things like that. So we'll have you back on. So anybody that wants to come in and have this same information, we have all this information and with dozens and dozens of tools and people that can help you out inside of the Alpha Mutants Discord. Have the links below for that. Go back and watch our other videos. Great information with great people in there. We've got a video with Nate doing some analytics and talking about different things, and we've got all different kinds of videos we'll be posting every single Thursday. They will drop on the channel. So please support us, like and subscribe, and all of that. And we will see you guys next time. Rick, thank you so much, sir. Appreciate your time, buddy.
Hey, thanks for having me on. And everybody remember, preservation of capital.
Preservation of capital, guys. All right. Bye.